Hey folks, Dan Frio here, the Mortgage Update, and today is October 28th. So let's go over what happened today. You see -8, that's teetering on somewhat of a little bit of a slightly big move. Usually about 0 to 5 is what we're looking at. That makes no change. Once you get above that, you might have a little bit of volatility in regards to interest rates. So let me recap for those that are new. Thanks for stopping by. My name is Dan Frio of the Mortgage Update. I'm a mortgage advisor, have been for 30 years. You can hear me on radio if you're in the Chicagoland area, weekdays from 7:30 to 8 p.m. on WYLL radio. And then you can hear me on Saturdays on WIND radio from 7 to 8 a.m. And I do the Mortgage Update with Dan Frio. Have done that for years and years and years. And if you check out my other YouTube videos, there's the shows. I put all the shows on there, and you can follow on what's going on. So what we do here is we monitor mortgage rates. And this is a good channel for realtors, mortgage advisors, mortgage loan officers, somebody in training that wants to know what's going on, or even if you're looking for a house. How do you get the best mortgage? And I get a lot of questions on here. People saying, here my rate is this. Should I do this? Or how do I shop for rates? Guys, I'm a mortgage advisor. I can help you. And I can do most of the country. Right now, we're still getting licensed in some particular states. But if you're out there and need some help, or at least need my opinion, I'd be more than happy to give you that. And a lot of people do email me, and what I normally ask for is send me a copy of your mortgage statement, and let's compare what is there benefits for you to do anything. Many times, somebody will come back and they say, my rate's at 4.375. Does it make sense to refinance? Well, if I run all the data and the rate is 4 or 4.1, I'm going to come back and probably say no, because of the cost of refinancing. It might not be worth it. Let's say it costs you $1,200 or $1,500 to do it, and you save, $20, $30. Would I do it? Probably not. I look at it as if I can start saving $150, $200 a month, then I might start doing something. Or if I can keep my same payment and maybe cut off 5, 6, 7 years or years on the term, that might be beneficial. So, but let's get at what happened today. There was an 8 basis point move. We're following the mortgage-backed securities market. This is actually the tool that basically is tied to mortgage rates. It's not the 10-year Treasury that most people think. So what happened today? Well, not too much. There wasn't really any economic news out. And let's go to here. So Monday, we had the Dow was up 132 points, S&P down up 16, and mortgage bonds or mortgage rates or the MBS market kind of had a bad day. There was no economic news. Here's what's coming up, though. If you watch my YouTube video yesterday, we basically went through this. It's a huge week. And if you're a mortgage advisor, if you're working with somebody who's working on your mortgage, hopefully it's me. But if it's not, I would ask my mortgage person to stay tuned and, watch the markets to see what's going on. Why I consider myself a mortgage advisor. I work for you. I monitor the markets. I do this. It's like if you want to invest in, you have $100,000 to invest, you're not just going to throw it at somebody and just say, here, you just buy something and just, nonchalantly, just, with no strings attached, don't know what they do, how they monitor things and everything. What I do is I watch this for you. So if I can catch a dip in the market and get you maybe a 0.1 or 0.2 difference in your rate, that might be substantial over the life of the loan. So let's go on what's going on this week. Tomorrow we have the pending home sales and the Case-Shiller numbers. This isn't really going to affect things much. It's just housing numbers. It does affect things. And again, if you watched the show yesterday, I go into kind of detail on how pending home sales and other things do affect the markets, but home sales and such really don't have a big role in the market. Now, here's the numbers that we're going to pay attention to. The ADP employment report, that's going to tell us, is the economy expanding, the job market? Is it stagnant or is it retracting? That's going to be something that we watch as well as the Federal Reserve watch. GDP. How are profits and the numbers with companies looking? that's another number that they're going to look at. Then the Federal Reserve is meeting this week, and they're going to come out and tell us what they've decided to do. Are they dropping rates? The consensus is there's about a 90+% chance that they're going to cut rates a quarter. I'm going to elaborate on that in a second. And then you go to Thursday, initial jobless claims. Are people losing their jobs right now? Are there job cuts? So these numbers, this here, the employment numbers and the unemployment numbers, or jobless claims, those are big numbers to watch this week. Personal consumption, employment cost index, that's really a non-concern for everybody. The personal consumption expenditure, the Fed watches this number. And I know I'm going through this kind of fast, but I just want to elaborate. It's a big week. I guess that's what I'm saying. And Friday, the BLS jobs report. So we got jobs coming out, inflation measures coming out, growth coming out, the Federal Reserve meetings, home prices and home sales. It's a big week. Today was flat, but we saw the market up 132. Now, let's get to, the Fed is supposed to be cutting rates this week. So the concern is, or here's what most people are asking. Well, the economy seems to be cooking. The stock market keeps hitting daily highs. Why would the Fed even contemplate cutting rates? Well, they're cutting rates on the future because what everything is signaling right now, Europe's starting to go through a recession. The trade imbalances, the China trade with the U.S., the trade wars, that's what everything is trying to combat. So the Fed is expected to drop rates. Now, let's say they don't. Well, the market's probably going to have about a 3 or 4 or 5% pullback because everybody's assuming that this rate cut is in place. So my prediction at this point now is they're going to cut, because if they don't, you're going to see the stock market really come down. That might not be a bad thing for mortgage rates. And for those that follow me, go back to one of the other videos I had in regards to the federal funds rate. That's the rate that the Federal Reserve controls, and then mortgage rates. There isn't a correlation there. There isn't. So that's, maybe tomorrow I'll kind of elaborate on that a little bit further. The federal funds rate, maybe Wednesday when they come out and announce, I'll tell you what my thoughts are on that, and where I see them going the rest of the year. But with the China trade tariff wars, and now you have Ukraine, then you have the impeachment trials, and you have a lot of other things. One little deviation in this, if we see like job numbers bad, or jobless claims going up, so meaning people are starting to lose their jobs, I see a big move in the markets. One little thing could trigger an avalanche. So let's go ahead. What happened today? Well, we were down 8. There was no numbers out in economic news that would really push anything. So I think we're just going to hover in this. Let's say 8 is basically flat. So we're here. I'm expecting, as long as numbers start to come in as we predict, we're going to ease back into these levels. Again, there's Fibonacci levels that are right here is a floor, right here is a ceiling. And again, these are kind of bumpers. These are, we usually hit here, and these are, they things trade in ranges. This is the range. We're now starting to come down to the lower range. I don't see this happening because I think just one bit of bad information is going to push this back up to these levels. And for some reason, I just got a feeling we're going to start seeing levels back in here. So if you're looking to refinance or buy a home, please don't. I'm not locking anybody right now. Meaning, here's what I mean by lock. So here's what happens is when you get a mortgage. You apply for the mortgage. What's today's rate? Today's rate, I'm just going to say, is 4. Okay, so you can lock in that rate for, and the lock increments are, you can lock in a rate for 15 days, 30 days, 45 days, 60 days, 90 days. Okay, the longer you want to lock your rate in, the worse the rate. So for example, you can lock in on a 30-day lock right now at say 4%. If you want a 45-day lock, it might be 4.1. If you want a 60-day lock, it might be 4.3. You want a 90-day lock, it might be 4.5. So what I always try to do is let's not lock you in. Let's get the mortgage application going now. And then I'm going to monitor this because let's say it's going to take us 45 days to close. You're buying a house and you're not closing for 45 days. Well, that rate, going back to what I just said, your rate might be 4.2. But if nothing really happens, if rates just stay stagnant, they're just bouncing around here like this, if I can wait 15 or 20 days, now I can get you a rate at 4%. Because now we only need a 30-day lock. So that's the thing I do. What I do too is if rates are going, okay, so let me go back for a second. This is, when we look at the MBS market, mortgage-backed securities, this is the price of a bond. What's happening to the price, okay? When the prices go up, yields or interest rates come down. So we like seeing this moving up. So let's say we're sitting right here, and you put in an application with me, and I'm going to watch this, and I watch it every day. So we're going here, 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 here. Now all of a sudden rates keep getting better and better. I'm still not locking you. So we were down here, we took the application here. Your rate might have been, let's say 4.3. By the time we got up here, you might be at 3.875. You know, if you went somewhere else, they're going to take your application and lock you in. They don't follow this stuff. So, you know, I might have been able to save this client. Let's say if I got you a 0.3 or 0.4 difference in your rate, and you have a $250,000 or $300,000 mortgage, it's a lot of money. Let's say it's, you know, the difference is $100 a month. I mean, you're talking, you know, over 30 years. You know, that's a lot. Let's even the average person has a mortgage for 7 years. So, I mean, you're talking thousands and thousands and thousands of dollars. So, again, this is the price of the bonds right now. A lot of analysts are saying to, you know, maybe lock. But I'm on my computer all day long, so I watch this, and I haven't locked anybody since back in here. But you know, that's why you got to be diligent and be on top of things and watch this stuff. So right now, I'm saying hold off. But if you see this trickle down, you know, go ahead and lock, or if you have to lock. But I'm estimating we're going to be back in this range within the next couple of days. We'll see. And if you can see it as well, if you come back tomorrow and then Wednesday and Thursday and Friday, we'll see where this takes us. So I hope you like what you see. If you would, please give me a thumbs up. I'd greatly appreciate it. Don't forget to subscribe down below. You can reach me if you want to call. Feel free to call me at 844-775-LOAN, which is 5626, or shoot me an email at dfrio, which is FRIO, at parksidelending.com. God bless. Have a great night. See you tomorrow.